Good morning, viewers. My name is Imran. I'm a UK and international tax specialist. The purpose of this video to explain the taxation of interest income. This topic is related to UK tax only, so highly tested in ACCA, ACA and CTA examination. It could be also tested if you study your undergraduate in accountancy and finance. So stay with me. I will explain to you in more detail how does it work. Taxation of interest income is always taxed up to non-saving income. So these rules you need to remember in exam as well. Those, like for example, if you have employment income, trading income, and rental income, so those will be taxed first, and then the saving income. So there are four possible rates: 0%, 20%, 40%, and 45%. However, this is the most important part: is personal saving allowance. There's a £1,000 saving allowance for individual paying tax at the basic rate, £500 saving allowance available for individual paying tax at higher rate, no personal saving allowance for those individual paying tax at additional rate, which is at 45% in the UK. Here's an example for a basic rate taxpayer. So Alex is receiving salary, for example, non-saving income of 40,000, and then he has an interest income of 3,000. So you need to lay it out like non-saving income and saving income, and then if there's a dividend income, you need to make another column. So then obviously there are no deduction, so you bring down the figure as it is, and then you apply personal allowance in priority against non-saving income. So then it gives you a taxable income. In our case, there's a taxable income. So the non-saving income subject to tax is 27,430. This is after we deducted the personal allowance. And then we have saving income of 3,000. So the way it will work is the first, so because he's a basic rate taxpayer, so he will have a personal saving allowance of 1,000. It means his saving income of £1,000 will be taxed at 0%. So it means he will not pay tax on 1,000, and the remaining 2,000 he will pay tax. So here's the calculation. So his non-saving income first. So obviously he's a basic rate taxpayer, so 20%. Then because of the saving allowance, so take 1,000 from his saving income and apply 0%. And then the remaining saving income will be taxed at 20% because he is a basic rate taxpayer. We already accounted personal allowance, so make sure you don't do all the time deduction for personal allowance. Any tax due for that 2022-23 will be payable by 31st of January 2024. For reason for those information is it give hints to examiner that you really understand the UK tax system. And then examiner sometimes they get happy and they give you like maybe half marks. So in exam you collect half from here, there, and then there's a chance that you will pass your exam, because in ACCA, ACA, or CTA, this 1 or 2 or 3 marks are really crucial. The student must know by now because they're usually failing by 1 or 2 marks. So please try to get as much marks from all the corners. Then this is example for higher rate. So Simon received the following income. So he got a salary of 52,000 and he has the interest income of 1,000. So remember, as usual, laid out non-saving income and then interest income. So then the less the personal allowance which set in priority against non-saving income. So that will give you a taxable income for the non-saving is 39,430, and for the saving is 1,000. So because if you add both taxable income, so then his taxable income exceeds 37,700. So his taxable income is 40,430. So in this case, so he is paying tax at the higher rate, or he will pay tax at higher rate. So then it's very simple. His personal saving allowance will be only £500. Okay, so take his non-saving income first. So take the first part, 37,700, because to this 37,700 the rate is 20%. That's why we break it down. and the remaining between 37,700 and 39,430 will be taxed at the rate of 40%. Then take £500 from the saving income, multiply zero rate, 0%, so there's no tax, and then on the remaining saving income, apply the tax rate of 40%, because remember, he's already in 40% bracket. So that would give you any total tax liability. Here's an example for the people who paying tax at additional rate, which is 45%. Now, assume Simon has a salary of 160,000 and bank interest of 500. So clearly, because of his income level, there will be no personal allowance available. In exam, you can write one or two lines. Do not waste time calculating, explaining yourself, because it's common sense. His income is 160,000, so you can just write, because of his level of income, there's no personal allowance available. So examiner understand that what you really mean. Okay, instead of saying, oh, for £1 it will decrease by 50. Well, you can if you do have time, but here is a clear-cut answer. Because of his income level, no personal allowance available, because it's well exceed than 100,000. So there will be, obviously he's paying tax at additional rate, so there will be no personal saving allowance either. So you will also just start with 37,700, 20%, then the gap between 150 and 37,700, that would be taxed at the rate of 40%. And then any income between 150,000 and 160,000, remember, then the rate starts 45%. Okay, and then obviously his saving income already in that bracket of 45%, so just apply 45% rate. Obviously you can just make one line or two that there's no personal saving allowance because of his income, there's no personal allowance because of his level of income. So this make one or two line. Okay, remember, we're always saying that personal allowance set against non-saving income in priority. However, when you fall in a situation like this, when the examiner asks you this kind of question, so where an individual has a net non-saving income more than the basic rate, but less than the total of the basic plus the personal allowance, which is 50,270, and his saving income exceeds 500, such that the taxpayer is a higher rate payer. So in this case, it is more beneficial to allocate part of the personal allowance to saving income in priority to non-saving income. Now here's the different things that we're talking. However, if you fall, like, look at the paragraph number 2. If this is a situation, make sure you follow the technique I will explain to you on the following slides. Here, now let's assume we're always talking that the personal allowance set against non-saving income in priority. Let's do this. So Simon has income of salary of 46,000, interest income of 5,000. So Simon has non-saving income more than 37,000, as we see in the previous slides, but less than 50,270. So based on the non-saving income, Simon is a basic rate taxpayer. However, if we add saving income to, he will become a higher rate taxpayer. So let's calculate. So we say is let's allocate personal allowance to non-saving income in full. So his non-saving income is 46,000 minus 12,570. Sorry, I didn't make any table, but just by now you should understand it. So then multiply by 20%. His saving income, remember, he's a higher rate, or he's paying tax at the higher rate. So his saving income, so take £500 and apply 0% because of his personal saving allowance of 500. Then the remaining saving income of 3,700, because we still left with some money that, for example, the basic rate starts up to 37 is applicable up to 37,700. So we just only utilize 33,430 plus another 500. So there's still part left, which can be, so this would help us to apply 20% rate for the saving income, and the saving income of £800 will be taxed at 40%. So bear in mind, just make sure you keep a track of how much income is subject to basic rate, and how much income, once you cross certain income, then you need to pay a higher rate, and then certain income. So remember, so the first 37,700, that is after application of personal allowance, tax at 20%. Then above 37,700 to 150,000, so that is taxed at the rate of 40%. Any additional income above 150,000, or any additional income or any income in excess of 150,000, taxed at the rate of 40%. So in our case, we only use that 33,000, and then still some money left to be taxed at 20%. So obviously we take that money from the saving income and then apply 20%. So just be vigilant, okay? Now, as we said previously, that sometimes it's helpful, if remember we said in the slide, that to use part of personal allowance against non-saving income and leave it some against saving income. So that will be the case. So the non-saving income, the way you need to do is take that 46,000 and apply personal allowance to the limit that you just left with 37,700 pound tax to, subject to 20%. Then take the saving income. So we dealt with the non-saving income in full. Then take the saving income, £500 at the 0% because of his personal saving allowance. Then the remaining saving income, remember his saving income is 5,000. 500 was subject to 0%. Okay, and we still left with personal allowance. Remember, we only use part against non-saving incomes. We still left with can be used against saving income, and then you multiply by 40%. So in this case, your tax liability is 7,632, which is less than calculated in previous slide. So by doing this magic, your tax liability has been reduced, but not significantly, but there is still some saving around 80, 90, 100 pounds. So this is one situation where personal allowance should not be automatically allocated to non-saving income in full. Maybe you will be tested in exam, so it's better to remember what I said in the previous slides. Now, there's a starting rate for saving. You may also get up to 5,000 of interest and do not need to pay any tax on this. So this is your starting rate for saving. So the more you earn from other income, the less your starting rate for saving will be. So you are not eligible for starting rate if your other income goes above 17,570. So your starting rate of saving is a maximum 5,000. So for every £1 of other income above personal allowance, it reduces your starting rate for saving by £1. Here is, as we say, there's a starting rate for the saving of 5,000. So there's example, individual earns 16,000 wages and get 400 interest income. So his personal allowance will be used against the wages first. Okay. So the remaining part of the income, which is 3,430, okay, this will reduce your starting allowance by the exact amount, 3,430. Okay. So the remaining starting rate for saving is, we still left with £1,570. It means if you have interest income of £1,570, that would be tax free. So remember, it's very crucial. So if individual has a interest income of 5,000 and his wages are 12,570, the entire saving income, there will be no income tax, because we still in that limit. So assume an individual receive an income of 13,000. So remember, we are something like £430 more than personal allowance. Okay, so then the allowance for the interest would reduce by this £430. Okay, so if you do have any questions, kindly drop me a line or two. Okay, if you have any queries or any comment, okay, I'm happy to answer all your queries. I have some more videos on car benefit, how this work, how you would tax the car benefit, like for example, a provision of car, a provision of living accommodation. I have videos available on exempt benefit. So there's a difference between benefit. The benefit usually is cash equivalent, but they're non-cash. Also have videos on taxable income and exempt income. You can subscribe to my channel. I'll be making some more videos on the corporation tax, inheritance tax, financial reporting, financial management. So this will be very helpful. It will help you to pass your exam, or you pass exam once you have a good understanding of a subject. Thanks for watching. Have a good day.